All right, ladies and gentlemen, I hope you had a wonderful day. It was an absolute crazy day in the markets. And after what happened today, it's about to get crazier because the Fed just snitched. Yes, so we got a lot to talk about. I have this whole video. You guys left me a lot of good questions. They sped up quantitative tightening today. The balance sheet runoff, they are bringing it to an end, but this was a very big deal. We have to talk about that. There was a lot of data in the morning, so even though Powell and this crazy pop and drop, today was the biggest we priced in for a Fed meeting since May of 2023, and to see that we closed almost break even, I mean, my goodness. But there was big data in the morning. The JOLTS jobs openings, they actually came in lower, so that was a good sign for the jobs data. But then you had bad PMI data. It was showing prices rocketing while sales were dropping, and that wasn't good. And there was all of this digestion, but we now have to tie this in to what we just heard from the Fed, where we go with the data, and where we end up with all the earnings. So, Chad, I got a lot for you. I have a pretty big hot take on this video, so we're going to go over that, but I have the plays and everything else. What I need from you, a thumbs up on the video. Make sure you're subscribed, and if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/thestackmarket. We will see you there in the morning, baby. Run it.
Working to the couch, it's the 2020 last. Live in the hills, but still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but the sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
Right off the bat, like I'm telling you, man, it was a crazy day with all of the data. How we reacted to Powell was crazy, and sadly, it's probably going to be a crazy follow-up. Not only did we have to deal with Powell and all of that, but literally 30, 40 minutes later, right as the market closed, you watch the Japanese currency make another one of these intervention-type beat moves, and that's part of it. So, like I'm saying, ISM data, job openings, even the ADP, and now Powell speeding up the tapering, acknowledging that inflation is back, and that was a big deal about today. You legitimately had Powell in the statement talk about, hey, inflation's up and we don't have that much confidence, or not as confident as we once were. There was all of this information, and just sadly, if the market is showing break even right now, there is a lot more of follow-up that we are going to do. So the other ironic part about it, the market was pricing in that 0.9. We literally went up more than that at one point at the top of Powell after the reaction. You were up by like 1.2, and then you sold off to go down by 0.3. The ironic part about all of it is that you went both above what was priced in and below it in the same day. So, like I'm telling you here, man, I really think there's going to be a bigger follow-up. It doesn't have to be tomorrow, but especially tied into that non-farms data, I would be watching out for it. But that's not the snitching, and maybe this could be part of it after all the reaction, even though the bonds moved and then like kind of came down and really just moved more pre-market, and then you see how the market played out. The rate cut odds got a boost today. Surprisingly, September rate cut odds, they got a little bit of beef there, and it was kind of weird because leading into this, remember, this is why today was so wild, because we were expecting a more hawkish Powell, and he just wasn't that hawkish. The statement was, how he talked about it, it was pretty much the exact same thing. And ahead of the meeting, we were pricing in rate hikes. And during the press conference, Powell made sure to make it clear there's no rate hikes on the table. It's only cuts or stay here from now. And it was definitely a lot cooler than the setup that we were pricing into it. So that was a big part of it. But now, let me just get into it, man. I got to give you the hot take here. There's a lot of changes that happen on Powell, but the way I see it, this was the big deal of the day, and we've talked about this. If you've watched these watch lists, whether or not I've been making you watch, I was like, watch this, son. No, but like, we've talked about this quantitative tightening thing. It's not anything new. We were waiting. There was plans, and people were expecting it, but you got to realize that quantitative tightening, it came in earlier than people were expecting. They thought they would be getting that in June or July. You got it right here now at the beginning of May. But not only did they do it sooner than everybody was expected, they are lowering it by an amount, easing up a little bit more than anybody else was expecting too. So this is a big deal. And like I'm saying, the reaction we had, I think a lot of people were scratching their heads. And I think the market's just going to move in a wide range as of late. We were talking 5,100 to 5,000, then 5,000 to 4,900. I think I said 49,000 on yesterday's video, but it's been a wild range and we're still like holding up. Don't underestimate how much we've moved. So I do think there's going to be a big range, but today, dude, the Fed, they low-key snitched on it. So you're going to have to follow with me here, but it's connected to a couple of things. One, the Fed went good with the QT, or they went early and bigger. Not much change beyond that. Powell still has his cover for everything else that he's doing. And then on top of all of that, we are going to be getting jobs data on Friday that could move this. So keep that in mind for the context, but now add that to after hours right away after the Fed surprises everybody and goes early on quantitative tightening, earlier and bigger. 30 minutes later, you have a suspected Japanese yen intervention. So here's my hot take, and here's what I think is snitching. I think all of the data coming out here in the next month or so is about to be favorable data. Why? Because I think it will bring down the dollar. Why? Because the Fed is speeding up their QT plan and the Japanese intervened right after. So the conclusion is, I'm assuming that the Japanese are working with America and the Fed, and they essentially have an idea that the data would be good. That's why they gave the green light to intervention, because if the data wasn't going to be good and then they intervened, well, you could spend a lot of money on your currency, and then if hot data in America hits and the dollar rockets up again, you might just get clapped all over again. So this is a very hot take. I don't know if you could call it conspiracy or not, but like I'm telling you here, this QT thing, earlier and bigger, it's not a coincidence. It's not random. It's not this. And this is where we are probably going to debate a little bit. And I got a little bit more of a follow-up, but that's what I'm saying. Why would Powell go early on QT? If you could give me an answer, let me know. Let me know what you think, baby. But that is your hot take and key number 2. And now finally, man, Friday's about to be the big one. The jobs data, the comments we got today. Powell did make comments towards the jobs market. He said he's not too worried about it, but he also said if there's an unexpected emphasis, he lawyered up on this one, unexpected drop in jobs, he said that could justify cutting rates. Believe it or not, he did kind of fight back against saying the job market is going to make him raise rates. And then he did say, although employment cost is important, he said that's not the big thing they look at for inflation, believe it or not. So that was all that factored into it. But like I'm saying, add that now to a big set of jobs data we haven't got in a month. I think it is going to be a very big one. And now even for tomorrow, there will be another chance for the bonds to move. There's going to be some challenger job cuts data, initial jobless claims, and then some unit labor costs. And just how we've been responding to wage data, we'll see. But after what Powell said too, we'll keep that in mind. There will be that chance to move us on the data front or just continue with what we had today. But Apple is probably going to be more important than ever now, just with how the market is, and especially after Starbucks. So we'll talk about this on the play, but if y'all didn't see Starbucks there again with both China, consumer, and the Apple and Starbucks are completely different companies, but there has been just random fall-offs. And if we do see that show up, like we've seen on names like Starbucks already, or just to the scope, Starbucks is probably one of the biggest here. That will be the worry for Apple. And at the same time, if we could dodge a bullet, Apple might be able to lift things up, but then the data will be the driver from here. But now, let us get into the plays. So, right off the bat, there's a lot. I hope you liked it. I was trying to mix in the keys and what went down today. There was definitely a lot, and hopefully you get the emphasis that there's going to be a big follow-up. But play number 1, bro, the yen. Did the Bank of Japan, did they hear that people were talking the point of no return? But either way, man, it's like I'm saying, if this next set of data is good and the dollar drops and now their intervention has the backing of like U.S. policy, again, the bonds, especially if this is just the first step. Remember, you just had Japan moving too. If that's the case, this should really help out the yen. But after what we just witnessed. I was just talking about it on that video the other day. Like, dude, I'm worried about a point of no return. Everybody is. They just saw it. I'm still a little worried after that latest fiasco. So if my hot take here is wrong and this doesn't materialize, dude, that's no, not good. Not good, Habibi. But that is play number one. Definitely watch out for that. It already has been taking over headlines since after the bell. Then play number two, Apple, baby. This is the big earnings, and watch to get lucky on the double dip. I noticed today they dropped and then went up. Those contracts, we already sold out for 100%. I went back to them, and I noticed they dropped, but then throughout the day, they did not move at all from there. So that got me thinking a little bit, and I'm saying, well, we'll see where it's at in the morning. If the contracts didn't have a move today, they may have the potential. Otherwise, that day, 2 days ago when we got the hit, that may have just been the pre-earnings move. So watch out for it, especially with the hype tomorrow, depending on how the market feels. I really do think Apple is going to be important, but pre-earnings sometimes it doesn't have to move. So that's the opportunity we're going to really be looking for, if it really has a big pre-earnings move or it's just going to stay pinned. But that is play number two. And then finally, Starbucks, man. This was one we had a very good gain on it. We talked about those puts yesterday, but I don't know. I may have to give you some updates on how I feel, man. Starbucks was low-key one of the worst earnings since 2000, one of their biggest declines as a stock, and low-key people are panicking. All of the guidance, the downgrades, like they already had a low bar and they came in. Like this is to the point where people are like worried about Starbucks, like genuinely worried after this report. And I'm really thinking this story is not over. And sadly, I think it was Deutsche Bank. They were talking about this thing getting pinned. And like people are talking about this kind of turning into the next PayPal, in the sense where it kind of had that growth, sells off, maybe it keeps selling, and then it's going to hit a level and kind of stay pinned for a couple of years until it works itself out. Hopefully this was just a blip, but like economically, there's a lot of things going on. It's saying stuff about the consumer, the company, and just how bad of a miss this was. It's wild. So like I was saying, I like it for the long term, but you definitely have a little bit more of a wake-up call from investors today after that report. So I still like it, but I'm keeping that PayPal logic in mind moving forward. But with all the option trades, like I'm saying, I don't think this story is going to be over. So it's been hard to hit continuations on Starbucks, but after one of the biggest moves here in like 24 years, it's probably going to have a couple of crazy follow-ups. So keep an eye out for it. Don't get trapped in anything, but if you see an opportunity, I mean, this thing can really move up and down. So we'll find out with that. But as far as everything else, those are the main plays. The plays I made today, I sold that Starbucks put 1,500%, $20 into 300, so not bad at all. And then I bought a SMCI weekly, a 555 put. This one was low-key just a lotto ticket after it was down, hitting that 700 level. That was their past earnings level, and I'm thinking it's either going to die or not. I went with the weekly, so I only have 2 days, spent about $50 on that 555. It went up for a little bit. I think for like 30 minutes, I was up like 50%. I tried to ghetto spread it, but I couldn't, and then it came back down. But going to ride that out, get lucky or not. And then I did a Qualcomm put for a quick earnings play. I spent like $20. I believe it was the 140 put, or actually 18 cents, and that was my earnings play, but I only went one way. I thought it was cheaper for the downside, and really, with all the pressure in the chips, I was like, I don't know if I want to chase any of the upside, and they were already up, but they rocketed up. That play is going to lose. Then I bought a $10 Paycom Lotto for earnings. That's just one of those extreme value plays, and that kind of stood out. But extreme value, if we get lucky, $10. I thought it was a good deal, especially when a lot of these options, man, so far, they've been expensive. And then I bought a TLT daily during the event, looking for some of that QT breakout, but then I thought I grabbed a weekly, but I bought a daily because now they have daily, so I lost $50 on that, and I'm still in my other bond futures. Those came back up considerably for me, so if you were watching the video from Monday, you could see how some of those plays played out on a Fed day like today. But other than that, that is all I did. I'm going to be watching those plays I just posted above for you, riding out a couple of other ones we're still in, and now to the questions of the day, baby. They said, Josh, before you go, what employment rate wouldn't be considered low anymore? And honestly, I love this question. I think it's very good and attentive to what's going on, and you should know this, and it's not that difficult. What is a normal level of unemployment, or where would it not be considered low, is when you go back to like the normal times. So in this case, that's literally like 4.5 to 5, pretty much at like 4.5% unemployment, that's still pretty good, and it's starting to raise. Once you get to 5, that's like a stable level, and then I think like 6%, that's when everybody freaks out. But like, take a look. This is a chart from like 1948, and you could see where we're at, and that's where a lot of people have to realize, like, we are well below averages in terms of unemployment. People have a lot of jobs. They're more employed now than since like the 60s or something like that. And even if you go like even pre-pandemic, you could kind of see where we're at. Like 2016, it was even 5%. That wasn't too bad. 2014, 6.9. So you could see where we're there. But like pre-pandemic averages, I think 5. Maybe once you get towards 6, maybe people would freak out. But really, anything above 5 starts to just be like 4.5, 5. It becomes more normal and gets you back to a more realistic average. So hopefully that helps out, but I think that's a very inquisitive question, so I'm glad that you asked that one. But to question number 2, before you go, I like that, Josh, before you go, what caused that huge turnaround when Powell was dovish? So like I said earlier in the video, I do think there was like a lot of natural movement in a sense, or just like a huge range lately, but I think it was just a computer move and positioning, and like low key, bro, it does not matter how the market moved. Like I'm saying, it moved above what was priced in and then below, but the real big thing was the takeaways that you got today. QT sped up, QT larger, jobs on Friday. That data will feed into what we had said today. Powell's attitude did not change that much. Who cares what the market did today? Because these follow-ups and how it's going to set up the narrative, the dollar, the 10-year, that is really what you should be caring about more. I don't think today, if anything, it probably concealed all of that and had you looking at the equity movements rather than, like I said, QT, that was big and something just happened here. And now those effects on the bonds, dollar, and everything else, that could be much larger and will make it much more hard to ignore for the markets if it develops in a certain way. So hopefully that gives you an answer, but vibe, baby. Vibe with it, man. But great question. I hope that gives you an answer to it. And now this one was a great one, man. I think this is very informative. What is quantitative tightening, man? So here's the deal. I've made a video on this before, and we talked about it. If this didn't just happen today, I wouldn't be going over it, but I do think it's very important. So go hit up Investopedia. Go search quantitative tightening. It'll tell you a lot. Quite simply, it is the process that goes about lowering a central bank's balance sheet. Usually, they do it by selling treasuries or by letting them mature. So simply quantitative tightening, lowering the balance sheet. You either sell stuff or assets mature and then you don't buy them back, and that lowers the balance sheet. In our case, so far, what the Fed has been doing over the last couple of years here, they have been letting the older bonds mature to lower their balance sheet. So if you don't know, Fed has been buying bonds for a while. They've through the beginning of time. So literally, there are bonds that the Fed purchased 10 years ago in 2014. There's even 20-year bonds that they bought in 2000. So literally, some of those bonds are starting to mature, meaning they bought the bond, they're going to get their money back plus the interest. And what the Fed has been doing to help ease and support the bond market, usually once they get that money from maturity and they get all the money back, they just buy back another bond for another 10 years, and then the balance sheet stays the same because they got their money back and then bought another asset. The balance sheet remains the same value. So as of a couple of years ago, about 2022-ish, when they started doing QT, quantitative tightening, the Fed started saying what we're going to do is let $60 billion a month mature without buying it back. So there's more than $60 billion a month in maturities, but they're saying $60 billion, that's going to be our cap. Once that matures, we are not going to buy back. So effectively, it has been allowing the Fed to lower their balance sheet by $60 billion a month, and that has been good as of late. So what they announced today is that they're only going to be lowering it now by $25 billion a month. So instead of letting $60 billion lower every month on the balance sheet, they're only going to do it $25 billion on the bonds there. So this brings up a lot of things, and this is the crazy part about today, because at face value, this is dovish. It means less bond supply. Literally yesterday, 2 days ago, Yellen and even the Treasury refunding today, they didn't change the issuances, and that calmed people down. And that makes sense with this, because even though the Fed is saying, oh, we might need more money, but we're not going to change how we're selling stuff, well, guess what? you now have the Fed saying we're going to run off about $35 billion a month less. Effectively, that means they'll be buying $35 billion. So it's still tightening. This is still tightening, but here's the crazy part. This is it. At face value, in the short term, this is dovish. But if Powell ends up doing this for a long amount of time and ends up just saying, yeah, we're lowering it faster now, but we're going to keep it running for a longer amount of time, he could effectively end up lowering the balance sheet even more. So although he made the change today, just like Bank of Japan, if there's no guidance to when it's actually going to end and he just does this now, higher for longer to a degree, then it could actually end up having a negative effect. So it's a pretty wild one. Hopefully that doesn't confuse you as much as give you a full picture of everything going on. It's kind of wild, and that's why we get all these crazy moves that we get. But that was the big news today. And now finally, I'm going to get to the last question. This one's kind of crazy, but, I thought you guys want questions. You asked me these. I wanted to give my take on it, man. Honestly, if Powell talks about these, why can't I? Somebody said, do you think they are purposely letting everybody in the U.S. to get the unemployment numbers up artificially? So this question has been talked about a lot. And like I'm saying, man, for real, Powell talks about this. So BS politics aside, this is either referencing like immigration effects and like a real macro impact or it's talking like GRT. And that's already very sketchy to say because it's low-key considered like a white nationalist movement. Elon talked about it. They got mad at him for this stuff, but I do hope for educational purposes you guys are informed on this. And I come from immigrants too. But the point is like, man, this idea of employment being necessary and how it affects our economy, this has existed for a while. So I don't know who they are. And like I'm saying, there is real economic things that you could garner and get from this. And I hope you vibe with my conclusion here, because unfortunately, I think you could spend a lot of time getting lost in the sauce of this, because there are people who benefit off of the immigration while some people are negatively affected by it. But sadly, my belief is it doesn't really matter because we're not going to really know ever. They do not release immigrant data. That would be discriminatory for them to ask and to monitor all that. They say that on the BLS, but I really, at the core of my heart, believe that all of the job numbers are heavily skewed and that there will be a giant revision later on, just like in '08 and other times. This is not uncommon. Go to the BLS.gov, go look at your history, and just as they revise crazy to the upside, you could see that on the downside. So like I'm saying, the numbers you see, like what are they really representing, So like to ask certain questions and we don't have the data behind it, it's like try not to get lost in the sauce. And here's the deal, whatever you think it could be impacting it to the upside, it could have the same potential if things do turn around. So just as unemployment could be rising heavily from immigration when we do get revisions and downturn, if it did have a huge outsized effect to the upside, that could play out as well on the downside as well too. So we'll see how it plays out. It's already a hot topic. I was giving some hot takes already today, but Chad, thank you guys again for the questions. Thank you all for being here, but that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember, baby, sometimes you got to fight a little bit for the peace. Don't be afraid to close the doors when the other ones are opening up, baby. But Chad, no, wait, you don't even need the other one to open up. Close it if it ain't good for you. Oh, yeah. But Chad, I love you. Drink that water. Stay hydrated and healthy. All that good stuff. I'll see you in the morning. And horn.